Do, 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 do. Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond over at the Contrarian Trader, and welcome. What we're going to talk about tonight are how our week has been so far since Sunday when we last met, and we'll talk about some trades that our members are looking for me to review that is part of their membership, and also we will take a look at the weekly charts. How are we shaping up to finish out the week? Some areas look fantastic, others not so fantastic. Sectors or commodities that I thought would do very, very well going to the week tanked this week, to be honest with you. So we're not going to talk our book here. We are long of the gold miners. It has not been a good week. We stopped out of 1/3 of our position. We still booked a profit, a handsome profit. However, it was time to lighten up. The bullishness that I had going into the week faded and faded rather quickly, and we'll talk about that in a moment. But first, I want to talk about 7 p.m. Eastern Standard Time this evening. We'll be having a private members group session, and that is where basically it's open mic night for members, and they bring up topics that they would like to discuss, as well as do a deep dive into our position, strategy, whatever's on their mind, and we'll talk about those trades. So if you're not currently a member, you want to join in, I have a soon to expire annual membership, titanium level, 50% off of that membership. And you can just click that link and you'll be sent over to the pricing page. You compare membership levels. The only one I discount right now is titanium. The other silver and gold. They have a lot more that goes with that. So I'm not really discounting that stuff right now. So let's start by saying happy Thursday. One day left till the weekend. Screen graph not clear. Thank you for that. Is this better? That's Disciplined Trader coming off of Twitter. Hey, Patrick. Yeah, I just got your email, Patrick. I know. You sold covered calls. You should feel good about yourself. You sold some covered calls. I sold covered calls as well. So Patrick sent me an email. He's a member. I just got it a few minutes ago. So you added more today at 26. Let's bring up NUGT. Let's talk about it. Let's talk. All right. So you can see that it's a rough week thus far for NUGT. Obviously, we are long. We remain long. We didn't stop out of our entire position. It's better. Thanks for that, Disciplined Trader. Appreciate it. So at current, we are trading down below weekly support. So we went into the trading day today with a strategy of when we must lighten up on our position. Yesterday, we saw some weakness. Let's go to a daily chart. We saw some weakness on the NUGT. I sold covered calls, 30 strike for, I believe it was 31 cents per contract. And we brought in some income. They're going to expire worthless, absent an act of God, tomorrow, because I sold the weekly contracts expiring tomorrow. And I said, if we break down to a new daily low and we appear poised to close down below the lows of Wednesday, we needed to lighten up. It was time. The markets were sending us a signal. We should have broken out this past week. We did not. You have the Federal Reserve in there, very, very active in the bond market. Yields keep heading higher despite the Federal Reserve, and the price action, it just isn't making sense. You have the dollar ripping through the ceiling. Look at this move on the dollar. So you have new round of QE4, and what is the dollar doing? It's gaining strength. And as you know, and if you're not aware, gold and the US dollar generally trade inversely. So as goes the dollar, the opposite direction goes gold. So we can't lose sight of that, despite the fact that we believe longer term that gold is going to proceed a lot higher because of the debt. Our debt is going nowhere but higher. That's the only way they can keep this merry-go-round of a stock market moving upward into the 2020 election. So while I can be as optimistic, as bold and brash and contrarian as can be and say, buy gold, come hell or high water, the market's telling me I'm wrong, at least in the short term. So it's time to make some profits real, lighten up, and live to play another day. And we'll continue to lighten up, not completely, we'll just continue to sell covered calls against our position and generate income until the charts shape up. We see a good setup, and then we begin to see behaviors, correlations, not behaviors. Correlations behave as they should. When you have the Federal Reserve in there pumping up the monetary supply, buying up bonds, you should see weakness in the U.S. dollar. We're not seeing that. All right, so until that gets resolved, we cannot be overly aggressive with our gold mining position, whether it be the GDX, the GLD, the NUGT, whatever. The charts all look the same. Volatility may be different, but the charts all look the same. You got to lighten up, sleep at night, live to play another day, because the markets could stay far more irrational longer than what you could stay solvent, okay? You got to remember that first and foremost. And if you haven't already done so, if you get any value out of this get-together, if you can give me a like on Facebook, subscribe, click that bell button for the future. And if you're watching this on Twitter, if you could share with a friend, leave a comment, I'd appreciate that as well. Thank you very much. All right, so back to Patrick and his email. You got in at 26. Let's go back to NUGT. So Patrick, you went in and bought. Good for you. Balls. All right, let's drill down here. We did rally into the back half of the day, but the final minutes of trade, we faded a bit. So you bought at 26. We closed above that level. Good for you. Just be careful here. Just be careful. I was hoping for a rally and a close above $27 per share. It wasn't to be. There was just no bid this afternoon in the final minutes of trade. And while we saw the dollar weaken up at the back half of the day, no real serious reaction on the part of the gold miners. Hourly chart, it's holding firm. So how far out are you going to go on those calls, Patrick? What's a strike you're thinking about? And weeklies or monthlies? Let's bring up the daily chart, because I just want to warn about one thing with NUGT. And it's the daily Stokes. It's just the thing with me, the daily Stokes trading down below 50, and both are. So that's a concern to me. Good. Yeah. All right, good. What strike price you thinking about, Patrick? With this, me personally, I would think that I'm going to stay near the money going into the next coming week, because until these daily Stokes get resolved and begin to hook up, as they continue to decline, I'm going to want to stay close to the money on those call options and generate some premium, and that'll provide more of a hedge. That sounds good. 28? Yeah, that makes sense. Okay, so you have some upside potential. You're generating income. You're using the weekly call options, and that is allowing for rapid time decay. I like the strategy. Thumbs up to it. All right, let's talk about the weekly charts of the major indexes. The purpose of this video is to, talk about how we did on the week. Before we go, we booked profits today on Angie's List. I've been talking about this for several weeks. I get questions, why are you holding on to it? It's not behaving well. There's a short squeeze potential here. And we held it into earnings, which were announced last night after hours. And we got out at about $8.31 per share. So we booked a nice profit today. So while we had to stop out of the NUGT trade, what offset the week somewhat are our profits in Angie's List and selling covered calls. It did not offset 100% of the hit that we took on NUGT by any stretch of the imagination, but still, it's nice to have a few winners in there to offset a rough week. So Angie's List, we book profits. We're moving to the sidelines here. If we pull back, orderly setup, perhaps we'll look to get long yet again. But I think we've seen our short squeeze here. We're trading above the third standard deviation Bollinger Band. I need to see a pullback before we decided to add back in here. Now, to the weekly charts of the major averages. The S&P 500. A new weekly high, continuation move higher. And there's nothing not to like here. I mean, the daily price action had me a bit concerned today. And honestly, this conversation that's going on right now about us pulling back on it, Randy, you're right. IWM did not behave well today. We'll go, since you brought it up, I'm going to go over that chart in a moment. Did not behave at all very well. Even on the 4-hour chart, very, very poor. And I mentioned it this morning on Swing Trading Today that I was concerned about how they were gapping the futures up higher and IWM in particular, or the Russell 2000 futures I was looking at, but same deals, it's the Russell 2000. I was worried about a double top and a pullback. Hey, Bill. Yeah, rough week. Is that tariff rollback been confirmed yet out of the White House? Have they confirmed that? And do we know? I looked a little while right before we went on air. I didn't see any details of what, if any, tariffs they plan on rolling back. Because I'm telling you right now, if they roll back these tariffs, you're never going to get the Chinese to the bargaining table. They won. The trade war is over. So I hope we don't. We may, for the president to keep this rally going into the 2020 elections, they may just do it, but I think that's strategically, it's a horrible, horrible move. So I haven't seen confirmation of it. If you have any information on that, if you could drop a link into the chat box, I'd really appreciate it. But I think that we're one tweet away on this market from either taking a nosedive or just ripping up higher. That's the type of market that we're dealing with right now. Bloomberg reporting it. You haven't seen the article. All right, so it's a Bloomberg speculation, unknown sources. All right, so I really want to see a confirmation out of the White House of what they're doing. Until then, all it is are, I know there's infighting. You have Peter Navarro, the trade negotiator for the president. I think that he's not inclined to give concessions. Others on the presidential reelection campaign are probably pressuring the president to accept tariff rollbacks. So I'm sure there's going to be lights on and pizzas being delivered at the White House late into the night tonight. So I'm against it. I think that we need to hold firm against the Chinese because if we blink, we lose. All right, so we'll go to the IWM. Randy, thanks for bringing it up in a moment. The Dow Jones Industrial Average. What's not to like here? China wants to phase tariffs, nothing from U.S. Phase out tariffs. Yeah, they just want to dump their goods here and they don't want any tariffs from us. Every country around the world wants the same deal that China gets. They've broken, ever since they were entered into the World Trade Organization back in, it was either the late 1990s, early 2000s. It wasn't that long ago. They have not met up to one, thanks, Patrick. They haven't met up to one of their obligations since entering the World Trade Organization. And it's at our expense. Look at Detroit. Look at our cities, for Christ's sakes. They're taking all of our jobs. It's not their fault. The president's right. It's not the Chinese fault. It's not the Mexicans' fault. It's our politicians' fault. It's the voters' fault for letting these politicians get away from it. I don't want to digress here. I can go on about this all night long. It's a darn tragedy what's going on here. So anyway, I digress. Dow Jones Industrial Average. We're trading near the highs of the week. A little bit of weakness today, right? We lightened up a little bit. There was a bit of selling on the news. Norris, hey. Norris joining in from Facebook. Getting in late, maybe went against your advice on NUGT. Bought Tuesday. Ooh, okay. And sold yesterday. Oh, so you scalped the profit, Norris. Good for you. Back in today, 27.05 and held. Was I crazy? It depends upon your time frame, Norris. I mean, no, I don't think you're crazy. Listen, might I stop out of more NUGT if it doesn't behave well? Yes. Will I be looking for opportunities to get back in at better risk-reward levels? Yes. Why? It's because what's the logic of as to why we wanted to buy gold, the miners, and silvers? The logic was, the thesis was, is that we had debt that we're never ever going to be able to repay. We have 220 trillion. 220 trillion. That's not a mistake. In liabilities, unfunded mandates. We have 22 trillion now in just deficit spending, deficit debt. And we're adding $1 trillion per year, and there's no sign of it ending, because if they allowed it to end, the stock market would crater. And you have yields that are rising right now. If you see 2% or higher on the 10-year yield, the stock market may be able in a position of saying, you know what, this is a problem for stocks. Right now, they're tolerating rising yields. But if you start getting up into the mid-twos around there, guaranteed you're going to see some trepidation on the part of traders. And you're going to see a rotation into safe haven assets. And once we realize that this debt is unsustainable, that we're not going to be able to repay it, you're going to see a rotation into gold, into the miners, because there's no place else to be. You don't want to be long of equities. And if you take a look at the chart of equities right now, it's not mom and pop buying 100 shares and driving stocks up higher. It's not hedge funds. It's corporations buying back their own debt. As yields rise and they can no longer borrow cheap to buy back their own stock, what's going to keep this market moving higher? You got me? So we didn't create this fiasco, this train wreck that's about to happen, but we're sure as heck going to profit from it. So even though we stopped out of our position today, a portion of our position today, we're still up dramatically on the trade. We booked profits. We're lightening up. We're just showing a little bit of discipline, and we'll look to re-enter. So Norris, no. As long as it's longer term, I wouldn't worry about it. Holding 2K of NUGT, and we'll buy more. Yeah. Okay, but let's put it in the context of what the longer term strategy is, right? I'll always say I'm adding more for long term, or I'm adding more as a swing trade. So it depends upon your time horizon on this, Norris, and that's what really matters to you as well. So pay attention to, or ask the question if I don't say it, as to whether or not this is a short-term swing trade because we're adding more here, or do I see a longer term? Like case in point, let's bring up NUGT again. So for our longer term trade, we want to take a look at monthly charts, right? Let's go over to Bill. China's gold buying spree comes to a halt after 10 months. Is that news announced, or is that a projection? And I'll tell you what I heard from, I forget his name. It'll hit me probably after I leave the air. Here's NUGT on a monthly basis. All right. So there's a difference here of as to whether or not we're buying long-term or as a swing trade for NUGT. So longer term, for me to get excited and to be a net buyer longer term of, and I mentioned this last night on Market Wrap with members, I want to see a close above. This chart has it annotated here at 31.25. The real number is 32.50. I need to see a close above 32.50 before I'm a net buyer with the intent of holding NUGT for the longer term. Until then, if I put on a trade at current, it's with the intent of me taking advantage of a short-term oversold condition. and that's it. Will I go to net zero on my NUGT position? Probably not, unless the market takes me out. So just keep that in mind. That 3250 level is what I'm looking at. I need to see a close above it, ideally on a monthly basis, and then we'll be net buyers longer term of the NUGT. Until then, I'll trade in and out of it. I'll sell covered calls, but at current, not with the intent of being a long-term buyer. Too much volatility. The bond market's not doing what I expected with the Fed intervention into the bond market. The dollar is still strong when it shouldn't be. Until I get it figured out, I don't have the confidence to be a net buyer longer term of the NUGT or of gold or the miners. I'll figure it out. And my guess is that what I don't know right now is a news event that's soon to be announced, and that'll explain what everybody else that's in the know already knows, and they're positioning in advance of what the public knows. That's my guess. I'm sticking to it for now. So, Norris, I hope this helps. It's my long-winded way of saying let's just define our longer-term objectives and our shorter-term objectives. I'll state them. If I'm looking to buy NUGT short-term, I'll state it. If it's longer-term, that 3250 level is like a line in the sand for me before I decide, okay, I want to be net long for the longer term of NUGT. All right, I digressed here. I want to talk a bit about IWM because who was it that brought it up? My apologies for not remembering names. Randy. Welcome, Randy. Let's go to a 4-hour chart of, this is NUGT, 4-hour chart. Can you believe this? I was looking at this morning. I expected a pullback and a retest like we had here. Hammered. What a day. Rough day. Cheers. All right. Let's take a look at the Russell. All right. So lower high. I think I mentioned this morning. And we have quite possibly another lower high here. And we broke down below a couple of support levels here. One, and I'm using the RTY, is the Russell Futures, 1601 spot 6. That was support level number 1. Support level number 2, which we broke down below, was 1596 spot 7. So the Russell is not looking good. So Randy, to your point, absolutely correct. The Russell 2000 has not been looking good of late. In fact, I've been speaking about, let's go back to TrendSpider really quick. I've been speaking about watch stocks, or watch positions, I should say. The IWY. This is the Russell 200. It was outperforming the Russell 2000 along with the VONG, which is the Russell 1000. You could see both today. While they closed higher on the day, they flashed reversal bars. All right, so they closed positive, but you saw some selling at the highs of the day. So my concern here is that whatever news comes out of the White House, if they're going to confirm that they're going to roll back these tariffs, I think that perhaps you'll get a knee-jerk reaction to the upside on the market. But, you know, let's face it, the market's primed right now for sell the news event. So I think that's what you began to see this afternoon. That was just a glimpse of what we might get with the Russell 2000 in all probability, the overall market. If yields keep heading higher, though, I think what will buck the trend are the banks. Let's bring up the XLF weekly chart. You can see even on a weekly, this is a daily chart. Well, since we started here, let's finish it off. We closed higher on the day, but more selling into the back half of the day. Let's drill down 30-minute chart. Here's a rollover. I think we may pull back even further. Perhaps he'll pop it tomorrow morning, try to take out highs. But I think that we could quite possibly pull back and fill this gap on XLF. But if yields continue higher, it's going to be good for the banks longer term. The weekly chart of the banks looks pretty darn good. I mean, what's not to like here? A little bit of topping action. Higher lows on RSI. Stokes looking fantastic. Emerging markets. This is the EDC. They're moving higher this week. So at current, if I had to draw up a plan moving into the coming week, it's looking at opportunities to get long of the market. I think that at current, we're waiting on a tweet. And that concerns me about getting long of the market because I'm worried about that sell the news event. Or if it's not what the market expects, we could pull back on this market rather substantially. Patrick, gold for immediate delivery traded spot 3% lower at 1486 spot 56 an ounce at 433 in Beijing, with losses following a statement from China that it has agreed with Washington to roll back tariffs on each. That's out of Beijing. They've been saying that, Patrick. I want to hear it out of the White House. I don't, not even Bloomberg. I really want to see it. Others goods in phases as two sides work towards a deal, with precious metals still up 16% for the year. Bill, was he scared of Beto? President Trump? I don't think anybody's afraid of Beto. Maybe the NRA, but that's about it. I mean, you want to talk about a beta male? I mean, that's Beto. I mean, Jesus Christ. Can you imagine him getting into the Oval Office and negotiating with the Chinese? I mean, they would put one hand behind their backs just to make it fun, negotiating with that guy. So let's wait for confirmation on this China trade news. I mean, if we roll back tariffs, that's huge. I mean, that is just huge. So I think we're on better footing with the Chinese if we just continue to pressure into the elections. All right, we got a few more minutes here. Oh, is Tom on? Tom is one of our members. He sent me a couple of symbols to go over. I'm not sure if he was going to be on. U.S. says phase one China deal would include. Oh. Also from are they citing a source, Patrick? Hey, RL. Just seeing your note now. Welcome. Whatever. I love that name. That's great. Welcome. All right. Let's see what is hitting on zero hedge, if anything. Yeah, Bloomberg entering the race. I saw that, RL. Yeah. Nothing on zero hedge. I need confirmation on that. And that'll bring some clarity. My guess is that that's what is at current. That is what's current. Keeping a bid under this market is a hope that the tariffs get relieved. The only problem, not sure if there was a source quoted. Okay. All right. So gold dropped. All right. So we'll see. We'll see. So the one thing that would be bullish for gold is this. Same with silver. All right. Let's take a look at what they're doing in the after hours session. Gold and silver. Gold is up a bit. Where are we at? 1468. Let's bring up silver, see how that's performing in the after-hour session. It's a bit early right now to be doing this, but what the heck. Silver, it's up as well. We'll see how we open up tomorrow. What I like here, at least on silver and gold, is with the very similar charts and how we closed today. Take note of, this is the event, right? The news came out, possible rollback of tariffs, flushed, right? The good news is that we didn't put in Mike Metcalf, State Street Partners. We didn't see a continuation move lower here. We had an inside 4-hour bar in the afternoon. Maybe a bottom here. You know, I'm not ready to bet on that quite yet. And we certainly don't want to use a 4-hour chart to identify a bottom, not when the daily chart looks like hell. So I want to go back to the dollar really quick. The problem for gold shorts at current and silver shorts is that the dollar has been moving up higher on negative news of China trade talks. So if there's perceived positive data, it may mean weakness for the US dollar, which may actually put a bid under gold. Now, the only fly in the ointment to that is that if yields continue higher, the dollar may trade along with it for a while, and that'll continue to put pressure on gold. So this is what I'm trying to figure out in my head. When are these traditional correlations going to trade in tandem again? And right now I'm not seeing it, so I'm lightening up on positions, booking profits, moving to the sidelines. We'll sit in cash for a little while and sell covered calls, bring in income. All right. TLT, I have TLT up here. I have my concerns about it. I was looking at it earlier. Now here's the TLT on a weekly basis. So we're talking about Thursday night, looking at the charts and how they appear poised to close. At current, the TLT is trading down below critical support. So we're seeing now a confirmation breakdown on the TLT, the 20-year bond iShares. So this is a long ETF putting you long of the 20-year bond, and it is rolling over to new weekly lower lows. Long-term bonds over 10-year are negatively affected by the buyouts. Okay? I think the 10-year and below, or one's getting help. What do you mean from the Federal Reserve? The 10 years below? I'm not following you on that. Buyouts mean mergers and acquisitions, or Fed intervention, because they're buying up T-bills. They're not buying up longer-term bonds. They're expanding their balance sheet by using 3 months. Yeah, okay. So this is not. It's QE4, but it's not your mom and pop's traditional QE. They are buying back short-term T-bills. So 3-month bonds, notes, bills, whatever they call them. They're not buying the longer-dated maturities. So that's why you're seeing weakness in the 20-year, the 30-year bond prices. And at some point in time, they made it public that they're going to go back in. They're just going to be buying everything in the kitchen sink. So it's only a matter of time. And this is one of the reasons why longer term, I like the price of gold. I just like gold longer term. So TLT, a weekly basis, not looking good here. I would not be a buyer. I'd be very, very concerned. And yet both lines on Stokes trading down below the 50 level on a weekly basis. Rallies tend to fade. I would sell any rally going into next week if we close where we are or lower on the week. Now, if we manage to rally tomorrow, closing back above support, okay, we'll revisit it. Maybe all is not that dire, but at current, the way I'm looking at it right now, it's not looking good for the TLT. I would avoid it like the plague. And with that, folks, I'm going to wrap it up. I want to say thank you for joining in. If you haven't hit that like button, please give it a like if you would. Subscribe to the channel if you watch us on YouTube. If you follow me on Twitter or watch it on Twitter, please click that follow button, retweet to a friend. I'd appreciate it. Everybody have a very, very great Friday, profitable Friday, and have a great weekend. And I will talk to you soon. Be well. And members, by the way, I'm going to go to the members' private session in a few minutes, 7 p.m. Eastern Standard Time. So join me there.